Okay, we're looking at the reinforcement activity 1. We're working on step 5, and we'll work on step 6 as well. Step 5 is creating the departmental financial statements. So we're looking at each department individually. And then in step 6, I believe we consolidate them and we look at the departments together. All right, so the information that I need on this margin statement is going to start out with operating revenue. And I'm interested in the operating revenue, the sales for the equipment department. So I'm going to go back to my adjusted trial balance. And here we have sales for equipment at 221, 838.25. So I'm going to grab that. Oh, it won't let me grab it. 221, 838.25. All right, so in order to help me from having to switch back and forth between the pages, what I'm going to do is I'm just going to capture this page. I'm going to capture as much information I can off this page and then work on the other page. So I'm going to use this thing called a snipping tool. So if you just type in the lower left box, SIN, it should come up. And once I have my snipping tool, I can press new and then kind of grab what I want to grab. So I'm going to start with sales here and just grab this. I'm probably going to need to come back later, but for now, this will help me get started on my margin statement that's on page 5. Split my screen a little bit here and just keep working down. All right, so I have sales for the equipment. So this is sales for the equipment. And then the next thing I need here is contra accounts. So I'm going to subtract sales discounts from them and sales returns and allowances so I can get my net sales. And so once I take my sales minus the 2 contra accounts, then I'll wind up with my net sales for the equipment department. So sales discounts for the equipment department is 225. Sales returns and allowances for the equipment department is 2606.68. So I'll grab those numbers, 225, 2606.68. And it looks like I need to just add those together. And when I add those together, I'll have my total contra accounts to sales. So for equipment, it's 2831.68. All right, so then when I take my sales minus the contra accounts, I'll get my net sales. So I have net sales of $219, $6.57. So that's going to be 100% of my net sales. So net sales divided by net sales is 100%. All right, now that I have my net sales, the next section that I'm going to work on is my cost of goods sold. So this is going to be my cost of goods sold section. And I'm going to start with my beginning merchandise inventory on January 1. And then I'm going to add any purchases that I had, less the contra accounts to purchases, which is purchase discounts and purchase returns and allowances. So same thing that I did up here to get net sales, I'm going to do down here in order to get net purchases. All right, so merchandise inventory, the beginning, I don't have it on here, so I got to go back and look that up. I guess I should grab that section with a snippet, but I feel like I'm going to lose this part if I do that. Because as soon as I click new, this is going to disappear. So, well, now let me keep going down a little bit, and then I'll come back to this. So once I have net purchases, I'm going to be able to get my total cost of merchandise that's available for sale, and then I'll subtract out my ending inventory for merchandise. And once I've subtracted out my ending inventory for merchandise, then I know what I ended up selling during the period. So then I can calculate my gross profit, because my gross profit is going to be my net sales minus my cost of merchandise sold is going to equal my gross profit. And then I need to take out all of the direct expenses. So direct expenses are things that we can attribute directly to equipment. So there's not a lot of stuff we can put directly towards the equipment department, but there are a few. So I'm going to list them here, and then I'm going to grab those amounts, and I'll come back and finish this out. All right, so what I can grab off of this sheet that I have over here already is I can get the advertising expense for equipment is $16,200, and the payroll tax expense for equipment is $39,1378, and the salary expense for equipment is $39,814. Ooh, I shouldn't have 35, I think. $39,814.35. And then I'm going to add those all together, and that'll give me my total direct expenses. At $59,928.13. So I can go ahead and divide that by net sales to get what percentage my direct expenses are to net sales. And that's going to be 27.4%. I'm going to round this up because of the 6th. I think in the instructions they tell me to round to the 10th. I have to click here to look at the instructions. I don't really want to mess up my screen, so I'm pretty sure it's 27.4 here. All right, now I need to go get the stuff that I skipped because I didn't want to lose my snippet, because I'm going to do a new snip now. So I'm going to go back here, and I need cost. So I'm going to need where am I going to get this information from? All right, so I need cost of merchandise sold. So I have merchandise inventory, purchases, discounts. Oh, I guess I had that stuff already. So merchandise inventory is what I need. So merchandise inventory is 89. I'll just grab that number, 89,626.86. That would be after the adjusting entry. So this should be my ending amount. So what I had left over at the end. Now I just need to go back to the GL to get my beginning merchandise inventory for equipment, which was 81,483.61. So 81,483.61 is my beginning. So 81,483.61 is my beginning. And then, let's see, what else do I need? I need purchases for equipment. So purchases for equipment, 110,882.20. Wait. Yeah, 110,882.20. Less purchase discounts, less purchase returns and allowances. So let me snip this. Where is it? Purchases. Here we go. Here we go. Not good at this. Let's try this again. Grab this info. I think this is what I need. Okay. Go back, and I have my purchase discounts for equipment, $1253.82. And then I have my purchase returns and allowances at $4117.61. And so I'm going to add those two together, and I get $53.71 as my contra to purchases. So then I can solve for my net purchases is 105, 510, 77. And then, ooh, there we go. And then, so I'm going to take my beginning merchandise inventory plus my net purchases, and that's going to give me what's available for sale. So 81, 483, 61 plus what I bought during the period equals this is what was available for me to sell. And then I grab this from my ending merchandise inventory from my adjusted trial balance. And so what I had available minus what I have left over equals my cost of merchandise sold, or what I sold during the period. So I'm going to take the 186, 994.38, subtract my ending inventory, and that's going to give me what I sold during the period. And then I can divide that by net sales to get a percentage. And that's going to be 44.5%. And then I'll subtract net sales minus cost of merchandise sold equals my gross profit. And my gross profit as a percentage of net sales is 55.5%. All right, so now I can solve my departmental margin after I subtract out direct expenses. So I'm going to take 121, 639.05 minus the 59, 928.13 of direct expenses that can be attributed directly to the equipment department. And I wind up with 61, 710.92, and divide that by net sales, and I get my departmental margin of 28.2%. So this department is making about 28 cents for every dollar. All right, so that's kind of how I can quickly interpret this information, is this particular department is making 28 cents on every dollar. All right, so let's look at the accessories department, and we're basically going to do the same thing for the accessories department. All right, so you can set it up exactly the same way, and then drop in the numbers from the same places. So remember, the beginning merchandise inventory, you're going to grab that from the GL. The ending merchandise inventory, you'll grab that from the adjusted trial balance. So for this one, you're going to set it up the same way. So I'll help you set it up, and then I think you guys should be able to do it, and I'll move on to the next section. So you're going to start with operating revenue. You'll have your sales for that department. You'll subtract out the contra accounts to sales, which is sales discounts and sales returns and allowances, in order to get your net sales. And once you have your net sales, you'll focus on your cost of merchandise sold. So you'll need to do that by first grabbing your merchandise inventory from the GL, so what it was to begin with. So on January, at the beginning, before you made any entries or adjustments, and then you'll add your purchases, but you need to get net purchases. So take your purchases, subtract out the contra accounts to purchases, and you'll end up with your net purchases. Once you have your net purchases, then you can do net sales. Merchandise inventory, what you started with, plus your net purchases is going to be your total cost that's available for sale. And then what was available for sale minus your ending merchandise inventory, which you'll get from the adjusted trial balance, is going to equal your cost of merchandise sold. Once you have your cost of merchandise sold, then you can take your net sales minus your cost of merchandise sold to get your gross profit. And then look at direct expenses, so things that you can attribute directly to the accessories department, and that's going to be advertising expense for the accessories department, payroll tax expense for the accessories department, salary expense for the accessories department, and then you'll have a total direct expenses for that department, and you'll be able to solve their departmental margin, or how much they're making on every dollar. I guess that's one way to think about it. All right, so remember, this beginning merchandise inventory is going to come from the GL. This ending merchandise inventory is going to come from the adjusted trial balance. Net sales minus cost of merchandise sold equals gross profit. Gross profit minus total direct expenses equals your departmental margin. Everything is divided by net sales, so this should be 100% of itself, and then everything else is divided by net sales to get your percentages round to the 10th. All right, so let's look at these income statements here. This is going to be consolidated for both of the companies together. All right, and so we're basically going to use the information from page 5 to fill out page 6, most of it, and then the other expenses that weren't directly attributable, then we're going to have to list them out as indirect expenses. So we'll start out with net sales here, and we'll have cost of merchandise sold, and then we'll have our gross profit, our direct expenses that were directly attributed to these two departments, and then we'll list out our departmental margin. So all this stuff up top can come from what we just prepared on page 5, and then we'll list out our indirect expenses. So this indirect expenses is going to capture everything else that we couldn't directly attribute to one of the two departments, and then we'll have our total indirect expenses. And so then we'll have our net income before tax. We'll decrease it by our federal income tax expense, and then we'll have our net income after tax. And so let's go ahead and start working this. I'm not going to fill it out completely, but you guys will be able to fill in the blanks pretty easily, I think. So we're just going to put each department individually, then we're going to have the company total, then we're going to get percentages here, then we'll list all the indirect expenses, and we'll get our percentages down here, and everything's going to be based on a percentage of net sales. All right, so for net sales for equipment, I'm going to grab this information from here. So let me go ahead and snip this. And I'll bring this over here while I work on page 6. So for equipment, my net sales was $219,006.57. My cost of merchandise sold was $97,367.52. My gross profit was $121,639.05. My direct expenses were $59,928.13. And then my departmental margin was $61,710.92. All right, so you're going to do the same thing for accessories, and then you'll add them two together, and you'll get a total here. And then you'll just divide everything by this total of net sales to get your percentages. So this one's going to be 100%. And then everything here will be divided by net sales to get your percentages. All right, so then the next thing I got to do is my indirect expenses. So I'm going to need those indirect expenses off the adjusted trial balance. So let me grab that. I think this should be all my indirect expenses. And let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yep. All right. So these are all my indirect expenses. I'm just going to list them out as they appeared on the adjusted trial balance. And then I'll fill in those amounts. Oh, this is payroll tax expense administrative. So this I could not, like, let's see. Do they give me that choice? There we go. Okay. And then rent expense, salary expense. So there's some administrative expense that I cannot directly attribute to one of these departments, but I could allocate it to those departments based on something. So I could see what the percentage of net sales is for each department, right? Because there's going to be a total here. And then I could allocate the admin cost to those departments, but this particular company doesn't want to do that or allocate those costs. So, but it's possible that you could allocate all of these just based on net sales if you wanted to, but you can't directly attribute it to it because our admin team, they're not splitting their time. They're not like starting a clock and stopping a clock. They're not saying, oh, I'm working on equipment stuff now. Oh, I'm working on accessory stuff now, right? They're just there. They're like our front desk. They're helping everybody at any time, and they're not keeping a track of who they're helping in which department. So this admin cost can't be directly attributable. So salary expense, supplies expense, uncollectible accounts expense, and utilities expense. All right, so I'm going to fill those numbers in from my, what is this called? My adjusted trial balance. Ah, now I need to add those up to get my total indirect expenses. And that's going to give me my total indirect expenses. And then I'll be able to finish this out. Basically, I'm going to take my departmental company, I'm going to take my company margin here, and then I'm going to subtract out my total indirect expenses. That's going to give me my net income before tax. Then I'm going to subtract out my federal income tax expense, which is $14,132.49, and that's going to give me my income after tax. So you'll take this minus this equals this, and then this minus this equals this. And so you should get percentages here based on whatever number you have divided by this net sales number that you'll have up here. All right, so for this one, let's see. What is accessories net sales? Net sales for accessories is going to be, where's sales accessories? Okay. So net sales for accessories is going to be 424, 944.50 minus the contra accounts, 415, 740.95. So I'll have 415, 740.95 here. add those together, my company total of net sales is 634, 747.52. So then 127, 159. So indirect expenses divided by net sales is 33. No, that's not right. Let's try that again. 127, 159.40 divided by 634, 747.52. 20%. And then my federal income tax as a percentage of revenue is 2.2%. All right, so I'm imagining this will probably be around 10. This will probably be around 8 once you fill in the rest of the numbers here. All right, then you have your statement of stockholders' equity. This is zooming in on the equity section of your company. So it's going to start with capital stock. We know that the capital stock has, let's see, what do we know about the capital stock? Here's, I think, the information we need for the statement of stockholders' equity. $10 par value. So we know our capital stock has a $10 par value. What do they want me to put here? I'm not really sure what they want me to put here. It's turning it red. I'll just leave it at no. $10. What do they want? I have no idea why this is turning red. I'm just going to put par value in here and keep rolling. And then on January the 1st, they're saying I had 14,000 shares issued. That's what this information is telling me. And so 14,000 times 10 would give me 140,000. And then during the current year, I issued 1,000 shares. They tell me that right there. So 1,000 shares at par value of 10, that would be 10,000 more. So then at the end of the year, I should have 15,000 shares issued for 150,000. And my next section, I'm going to look at retained earnings. I'm going to have my beginning balance of retained earnings plus my net income after federal income tax. And that number is going to come from here. So my net income after federal income tax is going to come from here. And then I'm going to subtract out any dividends that I paid, which I know I paid some dividends. So I think if I go back to the GL, I might be able to find that amount. So can somebody go back to the GL for me and look at what or actually maybe it's on our adjusted trial balance, dividends. Is it on here? Dividends payable is. Where's dividends? Anybody see dividends on here? Oh, there it is, 29,000. Okay, so then that's where I get my number from for dividends. So 29,000 during the year. So I'll take net income minus the dividends declared is going to equal my net increase or decrease. I think this is going to be a net increase because I think we had net income. And so then I'll take my 150,000 plus my, so I'm going to take my balance here plus my net increase is going to equal my balance on the end of the year. And then I'll take my 150 plus my balance at the end of the year is going to give me my total stockholders' equity at the end of the year, which, let's see if I can get all this other information in here. So my balance here is going to be my retained earnings balance at the beginning of the year. So before, well, that's going to come from my adjusted journal entry too, because before closing entries. So retained earnings, where are you at? Here we are, 114,803.91. 114,803.91. Then I got to take my net income minus my dividends declared equals my net increase. So then my beginning balance plus my net increase equals my ending balance for retained earnings. And so then my stockholder, my outstanding stock plus my ending retained earnings balance is going to equal my total stockholders' equity here. All right, so I'm not sure what to do with this. If anyone figures this part out, let me know. And I'll make an announcement on Canvas there.
It's 10.00.
Oh, okay. So they just want me to put the cents?
Yeah.
Oh, sweet. Okay, thank you. All right. And then I'm ready for my balance sheet. Balance sheet, I'm just going to grab my information from my, what is that called? Adjusted trial balance. So I'll start out with my assets. I'll list out all my assets starting with my current assets. So I got cash, petty cash, and then my accounts receivable, less the contra accounts to accounts receivable, which is my allowance account. They want me to put a less allowance account, okay. And then I'll do my merchandise inventory for both, starting with my equipment, and then I'll do my accessories. Then I'll list out my supplies, prepaid insurance, and I'll have my total current assets. Total current assets. And then I'll list out my plant assets. So my fixed assets, that's just going to be my office equipment, and then less any depreciation, accumulated depreciation on my office equipment. And then I'll have my store equipment and less any accumulated depreciation on my store equipment. And that'll give me my total plant assets. And then I'll add those two together. My total current assets plus my total plant assets equals my total assets. And everything is going to be a percentage of total assets. So this one is going to be 100%. And then everything else is going to be divided by this total assets in order to get the percentages here and here. I imagine that my total current assets are going to be a lot more than my plant assets in terms of percentages. So now I'm done with my total assets. So then I'm going to list out my liabilities. I'll start with my current liabilities. I'll list those out. And then I'll have my, I don't think I have any long-term liabilities. So I'll have my total liabilities. After I add up all these liabilities, I need to grab these from the adjusted trial balance. And then I'll have my stockholders' equity section. And this information I'll grab from the statement of stockholders' equity that I just prepared. I'm going to have my capital stock. And if I remember correctly, that was 150,000. And then I'll have my ending retained earnings, which I need to calculate, which I'm going to grab from right here. All right, so I'll grab, grab that from there. So I'll have my retained earnings. So this plus this is going to equal my total stockholders' equity. Oh, not that. It's just stockholders' equity. They both the same. All right, well, and then I'll add my liabilities plus my stockholders' equity, and this amount should be the same as my total assets, so this number should be 100 as well. Now remember, even these numbers down here are going to be divided by total assets, so don't mess up your percentages. Everything's getting divided back to the total assets. All right, and then finally the statement of stockholders, or statement of cash flow. So my statement of cash flows is going to start with my cash flows from operating activities. And so that's going to be my cash receipts from customers, my cash payments, and I'm going to be paying for like inventory. Let me see if I could pull this up. Financial cash flow. I think it's in here. Stockholders' equity, balance sheet. Here's my cash flow. Okay, so I'm going to have inventory. I'll have salaries and wages, rent. In taxes, no, because that's going to be different. So insurance, then I'll put income taxes and other operating expenses. And I'll have my total cash payments. And then I'll do my net cash provided by operating. And then I'll do my cash flows from investing. That's going to be my sale of equipment, which that's probably in the instructions. My purchase of equipment and my net cash provided by. Is this investing activities? Yeah. All right, we'll finish this up tomorrow, hopefully, and we'll have some downtime after we finish tomorrow in class.